A warm welcome to you, my dear children. We meet yet again with the latter part of chapter Unit 8. This is Unit 8, and in the cash book, the final part where we get to balance the cash book and the other ledger accounts. Well, I have already said that. We are going to balance the cash book and the relevant ledger accounts. Right. Children, what do you know about balancing account? Balancing accounts. What do you know about balancing accounts? No, nothing. Right, that doesn't matter. We'll learn how to balance accounts. First of all, we have to balance the cash book and then the other ledger accounts. Take this into your minds. Children, at the end of a accounting period, normally an accounting period is a period of 1 year. An accounting period is a period of 1 year. If the year starts on 1st of January, it goes up to 31st of December. But it doesn't necessarily have to be started on 1st of January. Most of the businesses start their accounting year on 1st of April sometimes. Sometimes 1st of May. However, 12 months period, a period of 12 months is considered as an accounting period. Alright? So, 12 months. During that period, the prime books of a business can be totaled or can be summed up according to the way it is easy or convenient for that business. It depends, right? How the prime books are totaled, in what period of time, and ledger accounts, how they are balanced, and financial statements at the end of the period, how financial statements are prepared. You're going to learn about financial statements later on, what financial statements are, how they are prepared. That differs from one business to the other, right? There is no hard and fast rule saying that or stating that every business should prepare their financial statements and balance their accounts within this period of time. There is no rule likewise. I'm telling you a lot about balancing accounts without even showing or without even reading the note. So let's first read the note. Let's read out, children. The value of transactions are debited and credited in the accounts according to the principle of double entry. At the end of the period, the difference of the total values in the debit side and credit side in the accounts should be calculated. The difference. Alright. I'll stop at that and I'll take you back a few slides back to where we were when we finished the last session. We finished the last session with this slide. Can you remember? Children, yes, I can see that you're nodding. Children, this is the first cash book exercise that we took. And this exercise comes in your textbook. It is an example exercise, an exercise which is done as the example in the textbook. In this example, we discussed a couple of transactions, not a couple, maybe 3 or 4 transactions, right? Yeah, we have done 1, 2, 3 transactions, and they are double entries. We have seen, you have seen how to record cash transactions in the cash book, and in the relevant ledger accounts, right? Now this cash book has been used to record transactions up until 28th. Can you see this date? On the credit side, the last entry has been recorded on 28th. Yeah. On the debit side, the last entry has been recorded on 26th. Yeah. I'm talking about the last transactions on the debit side and on the credit side. We are talking about the last transaction of the month. On the debit side, we have the last transaction on the debit side. We have the last transaction. This is the debit side. We have the last transaction on 26th. I'm highlighting that transaction, children. This transaction has been done on 26th. Yeah. This one. It is done on 26th, and it is a interest income. It is an interest income. Okay, you can see this clearly, right? It's an interest income of 3,000. 3,000. Interest income of 3,000. There you go. And it is done on the 26th. All right. This is the date of the last transaction. 26th. I'm showing it as clear as I can by using all the colors too. The last transaction on the debit side, and the last transaction on the credit side is this one. The very last entry on the credit side is this one. This transaction has been done on 28th. 28th. Yeah. So the month is over. January month is over. Okay. Did I cut that date? There you go. January month is over. At the end of the month, now the cash book is closed. See? We don't just close the cash book. We have to balance the cash book. That is what I have been trying to tell you from the beginning of this session. Every business do not do this on the same date. Like at the end of each month, one business could balance their accounts. Another business could balance their accounts every 2 weeks or after a week, after each and every week they could balance their accounts. It depends on business. It depends on businesses. One business to the other business, it differs. How? Not the way they balance. The way they balance is the same, but when they balance, on which date, at the end of how much of a period. That is what I'm trying to tell you. So this cash book can be balanced at the end of the month of January, at the end of January. Okay, and each of these accounts, ledger accounts too, can be balanced at the end of a month. According to this example, it is the month of January. So at the end of January, we can balance the accounts. That is what I'm trying to tell you. Balancing means this. Children, the debit side and the credit side has many entries. Just as in the cash book, same as the cash book, there are other relevant ledger accounts too, which have been prepared by the bookkeepers and accountants. All these accounts, including the cash book, have many entries. They have many entries on both sides. But the total of the debit side might not be the same as the credit side total. I'm telling you that the debit side total of all the entries might be different to the credit side total. Okay, but when we balance these accounts, children, we have to take the debit side total. Okay, take the debit side total, take the credit side total, and see the difference between the two sides. See the difference between the two. That difference is referred to as the balance of that account. That difference is usually that difference is the balance, what we call the balance of that account. All right, that is what in the textbook they have mentioned here. Value of transactions are debited and credited in accounts according to the principle of double entry. At the end of a period, the difference of the total of the debit side and total of the credit side should be calculated. This difference is known as the balance of that account. Now can you see it clearly? At the end of the period, let me highlight it for you. Let me underline it for you. At the end of a period, the difference of the total value of debit and credit in the accounts should be calculated. This difference is known as the balance. It is known as the balance. Right? So the difference between the debit side and the credit side. Difference between the debit side and the credit side. The difference should be calculated, and that difference is known as the balance of that account. Let's see how to balance. By really balancing a cash book. All right. Let's balance our same cash book which we have been dealing with. All right. Okay. Let's clear out all the drawings. Okay, and we'll balance this cash book. All right, children, this is how it's done. Okay, debit side. We first take a look at the debit side. There are how many entries? There are many entries on the debit side. We have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 entries. Okay, and we take a look at the credit side. How many entries? So that you can see the credit side properly. How many entries? 1, 1, yeah, 1, 2, 3, 4, 5, 6. 6 entries on the credit side. This is what you do first. The first thing, very first thing. Children, guess which side, on which side, on the debit side or on the credit side. Guess on which side you have the greater total, the higher total. Let's see, on which side do you have the higher total? It's just a guess, children. You don't do like by drawing a total box to take the sum total, to sum up. You don't draw a sum box. This is a sum box, and you don't take the total and write. No. It is just a guess. We just guess. We have an 80,000 in the debit side, 50,000, then 40, 30. It adds up to like almost 108,000. Yeah, almost. It adds up to almost 200,000, right? 80 plus 50 plus 40 plus 30 plus 3. When you add, it adds up to almost 200,000. Let's guess the total on this side. Is it that much? Do you get 200,000? No. So the greater total is on the debit side. Take the total and write the debit side total in the debit side sum box. What do I call a sum box? I call a sum box when I say a sum box, I mean the box in which you put the sum. You sum up and you put the sum in this box. So I call it the sum box. Debit side sum box. All right, let's draw it here. And credit side sum box. Let's draw it on the credit side. We drew both sides, debit and credit. For both sides, we drew the sum boxes. And we take the total of the debit side, because debit side is having the greater total, the higher total. Let's take the total of the debit side. Okay, 80,000 plus 50. You do the calculation. 80 plus 50, 130. 130 plus 40, 170. 170 plus 30. I'm adding up these amounts. 80 100,000 plus 50,000. How much? 130,000. 130 plus 40, 170. 170 plus 30, 200,000. 200 plus 3, 203,000. We get the total on the debit side, 203,000. Let's use the black color. 203,000. Okay. $203,000. When you get the higher total or the greater total, whatever the side it is, it can be in the debit side, it can be in the credit side, the higher total. You get the higher total and write it in the sum box. Okay. And from that total, you minus the credit side, the total of the other side. We have 203,000 on the debit side. Okay. And we take the total of the credit side. What is the total of the credit side? Let's total up. Sum up. 45 plus 8, 53,000. 53 plus 6, 59,000. 59 plus 34. 59 plus 34, 93,000. 93 plus 5, 98,000. 98 plus 6, 104,000. We get 104 on the credit side. Now what we do is we minus. From the debit side total, we minus the credit side total. Minus. Subtract 104 from 203. 104,000. You subtract from 203,000. How much is the answer? How much is the answer? Tell me. 99, isn't it? This is the answer, right? Do your calculation. Right? You got that, 99. That is the answer. That answer, 99,000, that is your balance. This is the balance of this cash book. This is the balance, children. Balance. This is the balance. This is the balance. I hope that way is clear to you. You can do it in a different way even. Balancing the account, you can do it in a different way, but this is the easiest way, right? Look at the sides, the debit and credit sides. Okay, look at the sides. Debit and credit. Okay, guess which side on debit or on credit? On which side do you have the greater balance, greater total? The sum, when you sum up all the amounts, on which side do you get the greater total? That is on the debit side. You took the debit side total and you sum up, you did the you summed up the debit side and you wrote the total on the debit side sum box. And from the debit side total, you subtracted the credit side total, that is this total. And the answer that you get, 99, is the balance of the account. What you do is, you write that balance on the credit side, which is the lesser side, just on top of the sum box. You write that balance on top of the sum box. You write that answer. The difference. You put the difference to the side which is short. This is the shortage. The shortage 99,000. It is the credit side is short by 99,000. Short means lesser by 99,000 than the debit side. So you get the shortage and you put it to the side is less. Then you add from the top with this 99. Then you add and get the total, which is 203. It's the same total as the debit side. Now this account is balanced. Alright, this account is balanced. Is this balanced, children? No, this is not balanced. Is this balanced? No, it's not balanced. Is this balanced? Now am I balanced? Yes, now I am balanced. This is what we do to the accounts. We get the total of both sides equal, or we balance the debit and credit sides of the account, just like we did here. And the difference, the shortage, is called the balance of the account. So the cash book is the balance. You write the balance. You write the word balance. Okay. Most of the time, children, we don't write balance only. We write balance carried down. Balance CD carried down. Yeah, so that's it. That is how we balance. I don't know whether you got this at the first effort, at my first in the first go. Let's do it another time, one more time with another account. So balancing the cash book, right? Before we go ahead, don't you want to know how this 99 is treated? Don't you want to know how this 99 is, how this balance is treated? Aren't you interested in knowing? I'll tell you. Maybe it will surprise you. I'll tell you this simply. Okay, children, in the cash book, children, the debit side has all the cash receivings, isn't it? Debit side is for receivings. So how much cash have we received totally? 203,000 we have received. This much we have received. Okay, 203,000 we have received. All right, so this is the total received amount, 203,000. And in the cash book, we know that the debit side is for cash receivings. We have recorded the cash receivings. So total received amount 203. Credit side, children, is for cash payments on the credit side. Okay, credit side we have the cash payments. And total 104,000 we have paid. Total 104,000 we have paid, this amount. This amount total we have paid. Totally 104,000 rupees we have paid. Paid out. Cash gone. So, if we have received 203,000 and only 104,000 is paid out, what is this 99? That is the remaining balance at hand. That is the remaining balance at hand. This is the cash we have left at hand. That is why we call it the balance of cash. Balance carried down. CD means carried down. Okay, CD carried down. And what we do is, for the next month, we should start the month, that is the end of the month, remaining cash balance 99,000. Next month should be started with this 99,000, so we write it under the debit side. Again, mentioning in the description column, balance brought forward to start up the next month. To start up the next month, balance brought forward. All right, that's about it. Did you get confused? No, I don't think so. If you got a little doubtful, we'll do another one to clear out your doubts. That's how we balance the cash book. We'll go to another account and we'll balance it off. It's the same way that you balance all the accounts, even ledger accounts. Just read this part, children. Just go through this part. This part. The total receipt of cash is 50,000. The total payment of cash is 33,000. This is what I explained earlier. Total receivings, total cash receivings, which means total cash into the business, is 50,000. Total cash receivings is 50,000. And total cash payments is 33,000. Then the balance of cash is 17,000. How did you get that 17,000? You took the 50,000, right? Take the 50,000. And take the 33,000. And minus 33 from 50. Answer is 17. That's what we did. Total cash receiving 50,000. Total cash payments 33,000. From 50, when you subtract 33, the balance is 70. That is the balance carried down. And you bring that balance forward to the next month. Balance brought forward. The balance of the cash book. Right. That is how you balance. They have given here, children, in the textbook. I took the part from this page number 89 of your textbook. 89 or 90 of the textbook. They have given the meanings of balance CD. Balance CD means balance carried down. Balance BF means balance brought forward. It's not rocket science, but sometimes some students find it difficult, a little bit difficult. In the first time, when you try out to balance an account. With practice, you are going to get better. Alright, so that is how you balance. See how this account is balanced? This is a leasing account. Okay, leasing account. Leasing account. You have an entry here on the debit side, 18,000. No entry on the credit side. Alright, just ignore that. Just ignore this, because this is they have already taken the balance carried down. Alright. they have already taken the balance carried down. I erased it, and even the balance brought forward. There's no need to erase. I'm going to reveal in the end, but for now I'm just trying to erase to show you how to balance this type of an account. This is a leasing account, and we have only one entry on the debit side, one entry only on the debit side, right? One entry on the debit side, 18,000. In the sum box, they have taken the total, that is this one, 18,000. Okay. 18,000 they have taken to the sum box. Yeah. And check the credit side. There's nothing on the credit side. There's nothing. Nothing on the credit side, which means in this account only one entry is there. I'm showing you how to balance that type of an account where there are no entries on the credit side. Okay, there are no entries on the credit side. Only one entry, that is in the debit side. It is 18,000. 18,000 is written in the sum box because that is the sum on the debit side. There is nothing to add. 18,000 has been taken to the sum box, and credit side sum box also 18,000 has been written because there's nothing on the credit side, right? What you do is this, children, you in an account like this, you write the total which is on the debit side, the debit side total, this total in the credit side sum box 2, and because there's nothing to subtract, there's no entry, the balance also becomes 18,000, the same amount. Okay, there is no entry on the credit side to add up and to take the difference in between this debit side and credit side. There is nothing there, so the same amount goes as the balance carried down of the other side. All right, and balance brought forward again onto this side. So there you go. Let's read out what is given. If the value of the debit side of an account is higher than the value of the credit side, balance we get is a debit balance. Value on the debit side, that is this, is higher than the value on the credit side. There's no value on the credit side, right? And there is no value on the credit side. So the balance carried down also is 18,000. Then balance brought forward comes to the debit side again. Value of the debit side is higher than the value of the credit side. The balance we get is a debit balance. They are talking about the balance brought forward. If the value of the credit side is higher than the debit side value, the total, then the balance gets to the credit side. That's it, children. That's about balancing accounts. We have an activity. Let's try this out. This is the activity number 2 coming in your textbook. Let's read it, children. Following are the details of cash transactions of the business started by Purnima. Purnima's business. On 1st, 5th, 2000, let's say 2020, 1st May 2020. Alright, following are the transactions that took place during the month of May until 31st. 1st of May, 1st of May, receipt number 001, started business investing 60,000. Purnima has brought money 60,000 to the business. Purnima has brought 60,000 to the business. Well, that is a cash receiving or a cash inflow. That is why a receipt number is given. For cash receivings, the source document is the cash receipt. Okay. And second, what is the transaction? Bought stock of goods, then obtained a bank loan, then cash sales, paid wages. Well, a number of transactions are there. Shall we start recording these in the cash book and in the relevant ledger accounts? Shall we? Okay. We are required to post the transactions to the ledger accounts and balance them off. First, we'll record the transactions. First, we'll record the transactions in a cash book, in a cash book. We'll record the transactions in a cash book. All right. Get a blank page. Draw the cash book. Do you know how to draw the cash book? Well, it's easy. Draw a T. First, you draw a T. A T. All right. There you go, a T. And the header row, the row for the headers. You don't have to use dotted lines, all right? You don't have to use dotted lines. Don't use dotted lines. I'm using dotted lines just to make it clear to you. Okay, just draw your columns after you draw the T. Now you have the T, and let's draw the columns. I told you in this in the previous session, children, that I'm going to give you an easy method, like a method which is memorable to draw the cash book. This is that method. When you draw the T, you divide the debit side and credit side. All right. Write debit on the debit side. Write credit on the credit side. First things first. Debit and credit. This is how you draw the columns. Little things have big effects. Just to memorize how to draw the columns. Little, which means little columns. Then big columns. Little things. This is little, then again little, but this is big, and this is also a little bigger. Right? That's how we draw the columns. Little things have big effects. Again, on the credit side also, little things have big effects. Well, in the textbook format, there is a ledger folio column that is not in my format. I have not drawn the ledger folio column. It is not necessary. It is not 100% necessary because we don't use that column. But if you draw it, it's better. The ledger folio columns normally comes, the ledger folio columns on both sides, they normally come before the amount column. So when you draw the columns on both sides, the corner column always, the corner column is always the amount column. Debit side also the corner column. Credit side also the corner column. The column on the corner. Before that column, if you draw a very narrow column, that is the ledger folio column. It's not needed. But if you draw it, that is 100% all right. Okay. And nothing wrong about it. This is the format of the cash book. Let's name it. Little things have big effects. Cash book. Let's name the columns, children. Little date, receipt number, details, or you can write description, details. Then ledger, folio, amount column. On the other side, on the credit side too, date, voucher number, details, ledger, folio, and finally the corner, amount. This column is not really necessary, children. This column is not really necessary, the ledger folio column, but draw it. Just in case you draw it, because we don't want to leave any room for a shortcoming. No shortcomings needed in our answer, so just draw the ledger folio column, although it's not needed. We have drawn it. This is the cash book. It's complete now. Yeah. Let's look at the first transaction. Following are the details of cash transactions of the business started by Purnima on 1st of May. So the first transaction is this. Started business investing 60,000. You tell me, started business. Cash coming in or cash going out? Coming in to the business. If you consider that I'm the business, let's think I'm the business. I'm the accountant of the business. Cash coming in or cash going out? When the owner is investing 60,000, cash coming in. No need to repeat this. You don't think yourself as the owner. Don't make that mistake. You don't think of yourself as the owner. You are the accountant. If you think of yourself as the owner, you're going to get this wrong. Okay, owner is someone else. He's a independent, separate entity or separate individual. He's bringing in money to the business. So we are getting money. Cash increase. Increase means debit. At the same time, because it is owner's money, owner's equity, his capital also increase. What is the double entry principle for capital? Increase capital. Right. Cash debit 60,000, capital credit 60,000. There you go, the double entry. The double entry. Let's write in the cash book debit side. First, let's put the year 2020. 1st May, receipt number 001, details, capital, 80,000 in the amount column. 60,000, I'm sorry, 60,000, not 80,000. Okay. How did you decide the detail or the description is capital? Because that is the other account, the capital account. And we are going to draw the other account, which is the capital account. somewhere over here. This is the capital account, children. Small accounts, I'm just drawing just to complete this exercise. Only the T format, okay? This is the capital account. And in the capital account, which side? If the cash book is debited, capital should be credited, of course. Should be credited. Yeah, 60,000 comes to the credit side. What is the description? What is the description, children? Yeah, cash. Cash. Let's put the date 1st of May 2020. 2020. Right, double entry done. Double entry is done, isn't it? Debit entry, credit entry. Easy, right? Next, second May, we have a voucher number, which means it is a payment. It's easy. If it is a receipt number, it's a receipt. If it is a voucher number, it is a payment. Yeah. What is the payment? Bought stock of goods for 35,000. Bought stock of goods for 35,000. Buying goods from our suppliers. Goods, stocks of goods, bringing more and more for the shop. That means goods come in, but cash goes out because we have to pay for the goods. Cash going out means cash decrease. Cash decrease is a credit. Cash decrease is a credit. But what is the other entry? What is the double entry? When cash decrease, what is increasing? Goods increasing. Right? Cash decreasing, goods increasing. When goods increase, asset increase, debit. Cash decrease, credit. Debit, credit. Done. Which account do you use when goods increase? Do you put to the goods account? Yes? Do you put to the goods account? Or do you draw a goods account? When goods are purchased? No. No goods account. What is the account? Tell me. What is the account? When we purchase goods for reselling, we debit the purchases account. That's right. So cash credit, how much? Oh, 35,000. Yeah? Yeah, 35,000. Cash credit. Let's go to the credit side. Huh? $35,000. 35,000 in the credit side. And in the details column, I'm going to write purchases. How did I guess what is there on the details, in the details column? How did I guess what to write in the details column? How did I write this word purchases? Because that is the name of the other account. That is the other account. The double entry goes to the purchases account. Okay. Let's draw the other account, the purchases account, huh? Here you go, the purchases account. Purchases account. And if this entry is credited in the cash book, other entry should be debited in the purchases account. Yeah, 35,000. Debit, credit, debit, credit. 35,000 in the debit side. What should be the description here? Cash. How? Because in the cash book, credit entry is there. For the credit entry, you write the name of purchases account. In the purchases account, you write the name of cash book. And put the date. 2nd May. That is the date of the transaction, 2nd May. Okay, that is done. Double entry is done. Credit entry, debit entry. Debit entry, credit entry. Let's do one more, shall we? 4th May. There is another transaction on 4th May. That is a receipt. 4th May. It is a receipt, which means it is a receiving, cash receiving, cash book debit. Receipt number 2. Obtained a bank loan, 40,000. Obtained a bank loan, 40,000. Money coming in or money going out? Taking a bank loan from the bank. Money coming in, yes. Cash coming into the business. Cash coming in. Cash coming in. So the cash book gets debited. What is credited? Yes. Bank loan, right? Cash coming into the business. Cash increasing. Cash increase debit. At the same time, that money is a liability because it's a bank loan. Liability also increases because it's a bank loan. It's a bank loan. Cash increases. That is all right. That is true. Cash increases. At the same time, the cash comes from a liability, not from a bank loan. So liability also increase. Before we didn't have a liability. Before in this business, we did not have any liabilities. Now this is a liability, taking a bank loan. That is why the liability also increase. Cash increase, debit, liability, bank loan increase, credit. Debit and credit. Cash debit, bank loan credit. What is the amount? 40,000. Let's go and record that 40,000 in the debit side. 40,000. Description is bank loan. Yes, you guessed it right. Bank loan. Date 4th May. And let's draw the bank loan account now, shall we? Bank loan account. Somewhere over here. Children, I'm again and again telling you, I'm just drawing the T formats because we need to finish this exercise quicker. You need to draw the formats, full formats of the ledger account. with the columns. Okay, this is the bank loan account. Bank loan account. If the bank loan is, if the cash book is debited with the 40,000, bank loan account should be credited. 40,000. Description is cash. Date, of course, is the same date. 4th May, it is done. Double entries. Likewise, children, we record the cash transaction in the cash book and the relevant corresponding entry in the relevant ledger accounts. To finish it off, I'll show you how to balance the cash book again. Just for those who missed the first time we balance. How to balance the cash book. I'm going to show you that again. Draw the sum boxes on the debit side and the credit side. What do I call the sum box? The box in which you put the sum up, and you put the total in this box. Okay. Draw the sum boxes. Then guess which side has the greater total. Obviously, credit side has only 35,000. Debit side has 60 and 40. Debit side has the greater total. Children, I'm balancing this cash book without completing all the transactions, just to make you familiar with balancing, the balancing part. You have to complete that exercise, and after completing all the transactions, only you can balance. We have more. We have like 1, 2, 3, 4, 5, 6, 7 more transactions, right? Yeah, we were guessing which side has the greater total. Debit side has the greater total. Let's take the debit total, the debit side sum, to the sum box. 60 plus 40, it's 100,000. Write the sum total, the total, inside the sum box. Then what do? Subtract the credit side total from the debit side total. 100,000 minus 35,000. Take the answer. How much did you get? Did you do the calculation? How much did you get? Is it 65,000? That's correct. This is called the balance. Should be written on the side which is having the less total, which is the credit side. So 65 comes to this side. That is the balance carried down. Simple, right? That's how you balance. Not only that, it doesn't stop that. The balance have to be brought forward to the other side again. The balance has to be brought forward to this side again. 65,000. When you write the balance again on the debit side, it's called balance brought forward. Yeah. It is called the balance brought forward. Children, now with this, we are going to end our session. The balance brought forward is the final balance of the cash book, which simply means we have received 60 plus 40, 100,000, and from that we have spent, money is gone, 35,000. The remainder is 65,000. That is the balance. It is brought forward to the debit side. From this point only, we start the next counting period of the month with this balance of cash. The cash at hand remains the cash at hand. Alright children, that's it for today in this session. We mainly learnt how to record transactions in the cash book and the relevant ledger accounts, and how to balance the cash book and the other ledger accounts. Balancing. In the next session, children, we are going to record the transactions with discounts. I hope you will get together with me. That's it for now. Hope to see you soon. Thank you very much.